Welcome, everybody, to simpleroptions.com. My name is Don Kaufman. Here we are, September 9th, 2015. The theme of the market today, just when you thought it was safe to get back in the water, the S&Ps take another hit today, down some 22 points over here. And this was just kind of a wild intraday reversal day. Again, saw a high in the S&P futures of 1992, a low of 1935. Again, for me as a trader, can't ask for anything better. 50, 60 point moves on an intraday basis. I'm in. I'm enjoying it over there. All right. One of the themes I'm going to look at specifically today is, I typically don't focus when we're getting much broader moves. I typically don't focus on individual stocks, but there's one theme I want to talk about. What's really going on inside of Costco? Okay, so I'm actually going to bring up, yes, a chart. Dun, dun, dun. I'm not much of a market technician over here, but I am actually going to bring up a chart of a stock that has recovered quite substantially from recent lows over here of the market. Now, this print that's just excessive all the way back here on August 24th. And I say it's excessive. This was in the midst of some wildness on that, of course, interesting Monday morning there on August 24th when the S&Ps dove and the S&P futures actually went lock limit down. Costco traded all the way to the 117 level. I tried to buy it there. It didn't work. Anyway, we've actually rallied back substantially from that point, okay, where the markets as a whole have not recovered nearly as much. Now, I don't look at this as an opportunity to get long. I actually see this as a little bit more of a shorting opportunity inside of Costco here. And this is a stock that I've tracked for quite some time over there. Many of the retailers got hit and hit hard today. We can look over to everything to Walmart, okay, which recovered quite a bit from those lows over there. Who would have thunk, this kind of volatility inside of Walmart over here. But I don't see the opportunity presenting itself nearly as much in Walmart to kind of re-up and get short over here. Then I looked over at Target. So I wanted to have some heavy hitters kind of in retail, and I was looking for an opportunity to get short. Again, the best one that I see, okay, on a percentage basis right now does in fact happen to be none other than Costco. Okay, so in looking at Costco, again, this has had a pretty consistent rebound from some of the recent lows. And if there's any inkling of imagination, if you think we could retest some of the lows of the marketplace as a whole, okay, Costco might be a good way to play it. And the reason I'm selecting Costco is I don't want to get you involved in something insane like Netflix. I don't want to get you involved in something like Apple, which, by the way, they released today. It's an iPad, but bigger, with a pencil that used to be called a stylus 20 years ago, but we don't call it that anymore. Now it's an Apple Pencil. But then they had a phone, but it's not just a phone. It's a phone that you can touch. Yeah, I'm poking a little bit of fun at the Apple announcement over there today. If you're a diehard Apple fan, so am I. Okay, but I was a little bit disappointed. Listen, I woke up this morning and I wore my Mac-issued underwear, and still nothing great got released. Or a new band for my Apple Watch over there. Wow. All right, enough of that. If I look at an opportunity to get short the market, I think we're going to possibly head back down. I think Costco is opportunistic to get short Costco, though, when it's already down today, just over like 1%. But it fared right in line with markets, but it's actually rebounded more on a percentage basis than many of the other stocks. Another area you could look to, all right, for a rebound to get short is Alibaba, which does it fall, though, under the category of retail, or does it fall under the category of China? Because Alibaba, to me, falls under the category of China, I won't touch it. Okay, I wouldn't touch it. I'm not going to try to fall on the falling knife, if you will, because that one, it's not even catching a falling knife. This one, you're pretty much jumping on a grenade over here. If and when the Chinese markets do rebound, you could see Alibaba explode back to the upside, so I wouldn't even touch it. So again, I like to short what is, if you put it this way, less volatile than the rest of the marketplace. And I think Costco gives you a good opportunity to do that. If you're looking for an options trade over there, look for a trade, maybe risks a buck to be able to make a buck. You can go out some 30 days, maybe even 37 days if you need yourself a little bit more time. The problem with 37 days is they're $5 wide strikes. Okay, so I'll actually select in the 30-day window over here. When I say risk a buck to be able to make a buck, I'll literally go out and do trades, buy the 141, sell the 139s. This is a $2 wide spread for about a 95-cent debit. Pretty much risks a buck to be able to make a buck. And if you look at the 141 puts, they're already in the money, okay, by approximately $1.30. And that's the most effective ways to be able to get short. Again, I don't love the idea of trying to get short on a down day. Okay, but this is an area that is opportunistic in products that have recovered quite substantially from the lows over there. So another note over here is Mr. John Carter himself has got a class coming up over here, and I feel pretty strongly about this one. We're obviously working with John for quite some time now. simpleroptions.com/formula. I like the idea of trading in a formulaic kind of method over here, where John's going to get into quote unquote step by step his real methodology, okay, to get consistency. And now more than ever, when I talk about consistency and I talk about step by step criteria, when you're in the midst of volatility, okay, it's what you need. Okay, it's what you need to be able to maximize potential in volatile markets. These right now are opportunistic markets. Okay. For the previous 5 years, I have waited as a trader. I have waited for more volatile markets. Now that volatility is here, okay, this is the time to kind of maximize, again, what your skill set happens to be. If your skill set isn't necessarily up to par, you're going to suffer in more volatile markets over here. And that is really specifically, John's going to do everything from strategies, or you can select the strategies and live trading. I'm actually going to be helping out on some of the live trading, inclusive of a number of indicators that we've built specifically for this class. John is going to be introducing a brand new squeeze indicator. So many people are familiar kind of with the squeeze indicator. We've actually re-engineered the squeeze indicator for the first time ever. You're going to be seeing that in the coming days over here. Check out the class, simpleroptions.com/formula. Again, my name is Don Kaufman. Be back on here just the next couple of days. Have a good trading week. Bye-bye.